What happens when a cryptocurrency is already trading at just a fraction of a cent, has fallen sharply during the day, and still has investors wondering whether the price is actually undervalued? Is JasmyCoin or Jasmy quietly preparing for a recovery, or are the current sell signals warning traders that the downside isn't finished yet? Today, we're taking a closer look at JasmyCoin, ticker JASMY, currently ranked around number 121, and the big question surrounding this project: is this weakness an opportunity, or could buying the dip become another trap for retail traders? At the time of this analysis, Jasmy is trading around $0.00375 with a market capitalization of $0.00375 with a market capitalization of roughly $185 million. The token is down about 4.25% over the last 24 hours, while 24-hour trading volume is around $7.9 million. The circulating supply is already extremely close to the maximum supply, with roughly 49.44 billion Jasmy in circulation out of a maximum 50 billion. Those numbers immediately tell us something important. Jasmy isn't an ultra tiny microcap anymore, but it is still small enough that changes in sentiment can produce significant percentage moves. And that is exactly why this coin deserves attention. Jasmy is built around the idea of combining blockchain, IoT, and data ownership. The broader vision is to give individuals more control over their personal data while creating infrastructure that can securely manage information generated by connected devices. That is a very different story from a typical meme coin. The project is focused on real-world data, IoT infrastructure, and the idea of data sovereignty. In theory, if the Internet of Things continues expanding and consumers become increasingly concerned about who controls their personal information, Jasmy's underlying narrative could become increasingly relevant. But here's the problem. A strong narrative doesn't guarantee a strong token price. The crypto market can completely separate a project's technology from its short-term valuation. A project can have a legitimate use case and still experience a prolonged downtrend if buyers aren't willing to step in. And right now, the chart is telling us that buyers have work to do. Before we continue, make sure you like this video, subscribe to the channel, and most importantly, leave a comment. I want to know what you think about Jasmy right now. Is this a buying opportunity, or are we watching another altcoin preparing for another leg lower? Looking at the short-term chart, the weakness is pretty obvious. Jasmy started the period near the 0.00390 area and then moved lower, eventually reaching approximately $0.00368 before recovering slightly towards $0.00375. That recovery is interesting, but we have to be careful about calling it a reversal. A bounce after a sell-off is not automatically bullish. Sometimes it's simply a temporary relief rally. The first level I would watch is the area around $0.00368 to $0.00370. That's where the recent selling pressure pushed the price before buyers finally appeared. If Jasmy can continue defending that zone, it could become an important short-term support area. But if that support breaks decisively, the bearish pressure could increase quickly. On the upside, the first major area traders should watch is around $0.0038, 0 to $0.00390. That's where the price repeatedly struggled during the recent decline. And above that, the psychological $0.004 level becomes extremely important. Why? Because round numbers matter in crypto. When a token trades below a major psychological level, traders often use that level as a reference point for deciding whether the market is actually recovering. If Jasmy can reclaim $0.004 with strong volume and hold above it, the conversation changes. Suddenly, we aren't just talking about a weak bounce anymore. We could be looking at the beginning of a short-term structural recovery. But if Jasmy repeatedly gets rejected below that zone, sellers are still in control. And that brings us to momentum. The current short-term momentum is weak. The price has been making lower highs during the decline, and the daily move remains negative. Volume is also something traders need to watch carefully. A recovery without convincing volume can be fragile. If the price rises but buyers aren't putting meaningful capital behind that move, sellers can easily return. On the other hand, If we suddenly see stronger volume combined with a break above resistance, that would provide much stronger evidence that the market is changing direction. So, what about ratings and signals? Unlike traditional stocks, cryptocurrencies don't have one standardized Wall Street analyst consensus that can simply be classified as buy, hold, or sell. Instead, traders usually combine technical indicators, momentum, volume, market structure, liquidity, and broader sentiment. And based on the current structure, the short term signal is cautious to bearish. The negative daily performance, recent lower highs, and failure to reclaim important resistance all favor the bears for now. That doesn't mean Jasmy is a guaranteed sell. It means the bulls haven't provided enough confirmation yet. And that distinction is extremely important. Now let's talk about the biggest debate, undervalued or value trap. The undervalued argument is actually pretty interesting. Jasmy is trading at around $0.00375, which makes the token psychologically look extremely cheap. The project also has a real narrative around IoT, blockchain, and personal data. And because almost the entire maximum supply is already circulating, investors aren't facing the same kind of massive future supply expansion that can exist with some other cryptocurrencies. If the Jasmy ecosystem continues to develop and the market eventually places a higher valuation on decentralized data infrastructure, today's market capitalization could potentially look small in hindsight. That's the bullish argument. But now comes the uncomfortable part. A low token price doesn't necessarily mean low valuation. This is something retail traders constantly misunderstand. Jasmy having a price of less than 1 cent doesn't mean it is automatically cheaper than a cryptocurrency trading at $1. What matters is the total supply and market capitalization. With roughly 50 billion tokens in existence, even a relatively small move in the token price can represent a substantial change in market value. So traders shouldn't look at the number after the dollar sign and decide that Jasmy is cheap. They need to look at the entire valuation. And that's where the value trap argument becomes relevant. If adoption doesn't accelerate, if the narrative loses attention, or if investors move their money into other sectors, Jasmy could remain under pressure even if the token appears extremely inexpensive. That's how value traps happen. The price falls, people say it's cheap, the price falls again, people say it's even cheaper. And eventually, traders realize that the falling price was not necessarily creating value. It was reflecting declining demand. That's the danger. Now let's discuss the risks. The first risk is simple, continued technical weakness. If Jasmy loses the recent support around $0.00368 to $0.00370, traders could see another wave of selling pressure. The second risk is volatility. A market capitalization around the mid hundreds of millions means Jasmy can move significantly when sentiment changes. That creates opportunities, but it also creates danger. The third risk is competition. The crypto industry has no shortage of projects working on decentralized data, IoT, artificial intelligence, deepen, privacy, and Web3 infrastructure. Jasmy doesn't just need to build technology, it needs to remain relevant while competing for developer attention, users, partnerships, and investor capital. Another major risk is market-wide weakness. Even if Jasmy continues developing its ecosystem, a major Bitcoin correction or broad altcoin sell-off could drag Jasmy lower. Crypto rarely moves in isolation. When risk appetite disappears, smaller altcoins often feel the pressure much more aggressively than Bitcoin. And this is where retail traders get trapped. They see Jasmy down more than 90% from its historical peak and think, how much lower can it possibly go? But that's the wrong question. The better question is, what would make buyers return? Because a cryptocurrency doesn't need to return to its old high to give investors a significant percentage gain. But it also doesn't need to stop falling simply because it has already fallen dramatically. Now let's look at the bull case. The best case scenario starts with Jasmy defending the 0.00368 to 0.00370 area. Then we would want to see a series of higher lows. After that, the next major challenge would be the 0.00380 to $0.00390 region. If buyers can push through that area and reclaim $0.004 with strong volume, the short-term structure could begin changing. That could attract momentum traders and potentially create a stronger recovery toward higher resistance levels. And if the broader crypto market turns bullish at the same time, Jasmy could benefit from renewed interest in smaller cap altcoins. But now let's look at the bear case. If the recent bounce fails, if sellers return around resistance, and if Jasmy breaks below the recent low near $0.00368, the market could interpret that as confirmation that the downtrend remains intact. In that situation, the recovery we've just seen could turn out to be nothing more than a temporary bounce. And that's the scenario bulls absolutely don't want. Because once support breaks, traders who bought the dip can suddenly become sellers themselves. They realize their expected rebound isn't happening, stop loss orders get triggered, and selling pressure can accelerate. So, where does that leave us? In the short term, Jasmy is still a chart that requires confirmation. The bulls have a clear job: defend support, build higher lows, increase volume, and reclaim resistance. The bears have the easier argument right now because the existing trend is already weak. But the long term picture is much more interesting. If Jasmy can successfully connect its blockchain infrastructure with real world IoT applications, data ownership, and actual user demand, then the project has a narrative that could remain relevant for years. The question is whether that narrative can translate into sustainable ecosystem activity and token demand. That's what matters. Not the fact that Jasmy is below 1 cent, not the fact that it used to trade much higher, and not the fact that some traders believe it is cheap. The real question is whether future demand can justify a higher valuation. Right now, the market is still skeptical. The chart is weak, the short term momentum is negative, and the bulls haven't yet produced a convincing breakout. But at the same time, Jasmy has a recognizable real world narrative, an established ecosystem, and a market capitalization small enough that a major shift in sentiment could have a meaningful impact. So, is JasmyCoin an undervalued opportunity hiding under $0.004? Or is the low price creating the illusion of value while the market continues to warn us? That answer may not come from today's price. It could come from the next major support test. If buyers defend the lows and Jasmy breaks back above $0.004, we could be looking at the early stages of a very different story. But if support collapses and sellers take control again, the current bounce could become nothing more than another failed recovery. So I'll leave you with one question. Is Jasmy quietly building the foundation for its next major move, or are investors simply catching a falling knife because the token looks cheap? Let me know your opinion in the comments. And remember, this video is for educational and informational purposes only. It is not financial advice. Always do your own research, understand your own risk tolerance, and never invest money you cannot afford to lose.